Hi friends, this is Manidi from BCCA. So now in this video, I'm gonna give a review and explanation for some MCQs and questions from the June 2024 IDT paper. Okay. First of all, let me give my opinion on this paper, whether it is easy or a tough paper or a moderate paper. So I can say like it's a moderate paper, sir. Marks, I mean, securing 60 marks is not something unachievable. You can easily get 60 marks from this paper with proper preparation. Okay. Out of 15 MCQs, 12 MCQs are answerable. Only 2 to 3 MCQs are like tricky or generally requires a lot of interpretation skills. Out of them also like one or two MCQs, again around 13 to 14 MCQs a well prepared student can answer. An averagely prepared student can also answer 10 to 11 MCQs. Okay, so coming to MCQs, that part. Now coming to the question, sir, it was not actually as expected. There are questions which we could expect, and there are questions which we cannot expect generally also. Out of them is the first one is like eighth question, sir. If you look at the eighth question, this kind of question will not generally predict this kind of question, which is something unusual. Generally, institute will not, I mean, in the recent two attempts, if you take it as a trend, they are not coming up with such kind of questions. But still, these two questions are little tricky. Since we are having two questions choice, we can take one question, eighth question as choice. That is one thing I can say. If you attempt eighth question, I don't think majority of students can give proper answers for this unless you have a proper understanding. I don't think so that will happen. Next, coming to the fourth question, sir. Fourth question, the point is again, this is related to an advanced ruling 4B, but this is there in institute materials. Once you cover the first chapter, I mean, in institute materials, supply charge, exemptions, all this will be covered now. Once after that MCQs, then you will be finding these case studies. Okay, there, this is there actually. So directly it is asked as a question. So if you read that, then you can answer it perfectly. Next, 4A. 4A, sir, it is an expected question only. We'll expect a question from TCS generally. And there are amendments also in TCS. But the question they asked is not from amendments. They asked the consequences for non-filing of TDS or non-complying with the provisions of TCS. Okay. So non-compliance of TCS results into interest, penalty, late fee, all this will be there. But how much answer we could write? Do we really write an answer for 7 marks is a point here. So generally we'll get to do 3 to 4 lines hardly here. So that's fair. Fourth question is one question where there are some tricky points involved. Next, seventh question, sir. A is a simple valuation question only, whereas 7B is again unexpected question. But generally, we'll expect here baggage question. Instead of baggage, they asked a question from provisional assessment. Calculation part easy only, but not much focused by students. So that's why I'm saying like this part. Okay. Let us go into the in-depth review from MCQs, then we'll come to the questions also once again. So I'll just give a briefing about the paper initially. Now coming to the first MCQ, sir. The first MCQ, if you see, it is from the appeals chapter, sir. Generally, we'll expect this one. Even in marathons also, I'll say this part. Okay, we can expect a question from pre-deposit. Sir, here, an appeal has been filed with the appellate authority. So what should be the pre-deposit? The pre-deposit should be made is tax interest penalty which is accepted has to be paid as pre-deposit. Along with that, 10 percentage of the tax which is not accepted. I mean disputed amount of tax into 10 percentage. If you see here, pre-deposit before applied authority, tax interest penalty accepted. 3 lakhs, 15,000, 20,000, which is 3 lakh 35,000, and disputed amount 5 lakhs tax on the 10%, it will come to 50,000. Total it would be 3 lakh 85,000 is the option. Next, coming to second MCQ, sir. Sir, it can be answered quickly as well, and it takes a lot of time also. Okay, even for me also, I checked double time for this one because there are two alternatives that can be possible. We should wait for the institute suggested answer to get the actual answer. I was predicting here, okay, in two ways, sir. I think like I cannot come to a conclusion like which would be the right answer. So half of my mind is saying like this option 7 lakhs will be correct, and the other half is saying like B nil will be the correct answer. So we should wait. I mean, both seems to be correct answers for me. We should wait for the institute. Let me give an explanation for this. Supply TV by employer to employee at 70% discount, sir. Employer and employee are related parties. So when they are related parties, then the transaction value between them, value of supply cannot be the transaction value between them. The 30% cannot be taken as value of supply. So what we should take as value of supply means you should go to the rules, rule 27, 28, 29. Okay. Out of them, since they are related parties, rule 28 is applicable, not rule 27. So what does rule 28 says? Rule 28 says like take open market value as the value of supply, open market value. Okay, since recipient is not registered and not eligible for claiming ITC, take open market value. So what is the open market value given in the question? That's 7 lakhs. So 7 lakhs will be the option. Now why nil? Okay, sir, let me look at my point of view. Here 7 lakhs is the open market value, sir. Out of that, 70% is given as discount. The discount, I mean, they're getting some benefit from the employer by employee. But if you could clearly read the question, they said like specified as per contract of employment. That means they are not getting it as free. They are getting it as like a perquisite kind of 70% as free. They are getting it. So, and it is as per contract of employment. So when I am taking my offer letter, it is said like I'll get a TV for 30% of it. I mean 70% I am saving now. So this is like a part of salary. So that's why 70% is not taxable. So now coming to the not a supply covered under the negative list. Now coming to the other 30%. So what is the other 30%, sir? Other 30% comes to 2,10,000. So now the other option which they could say is like 2,10,000 individually. If you see, it is less than 50,000 for each employee they given. So if they call it as gift to each employee, the amount given is less than 50,000. So it is not a supply. So we could even take the answer as what? Nil. Sir, I can even tell a third possibility also, 2,10,000. Sir, if you cannot say it as a gift, I mean the 30% amount which is charged from employee by employer cannot be called as gift, sir, since they are taking amount and they are not nowhere mentioned it as gift now. Then we could say 2,10,000 as the value of supply, because 70% cannot be taken, because it can be taken as what? Consideration for the work they done. I mean, it's a part of salary. They're getting it as discount, but it's a part of salary. So as per negative list, this has to be excluded. So 2,10,000 can only be taken. So if you see here, there are three options which seems to be correct. Okay, na? So only 4,90,000. If any student answered 4,90,000, then you could just ignore this one because you are not getting any marks. Otherwise, B, C, D, any other options out of these three, if any option you pick, then you have chances still. You should wait for the institute answer. Now, coming to the third question, sir. This is, which of the following statements does not cover exemption notification with respect to Residential Welfare Association? The Residential Welfare Association, the notification says like, where the amount charged by from each member is more than 7,500, it is taxable. Okay, this is first point. Second one, they should register only when their aggregate turnover exceeds 20 lakhs. So that means when their aggregate turnover does not exceed 20 lakhs means even though they make a supply, the value is more than 7,500. Since they are unregistered, they are not liable to pay tax. First one. Second one, even though they are registered, when the value, I mean the membership fee collected from the association, I mean from the members is less than 7,500 or equal to 7,500, then also they need not to pay any tax. So if you see the first option, 7,300 only amount, so exempted. Third option, less than the turnover, aggregate turnover is less than 20 lakhs, so they are unregistered. Fourth option, their aggregate turnover is less than 20 lakhs, again exempted. So that means 1, 3, 4, they are exempted only. Only second one, the point is taxable. Here they are asking which is not covered under exemption notification. If it is not covered under exemption notification, obviously it should be taxable. So which is taxable? Only option 2 is taxable. So that is the answer. Next, fourth one, sir, very easy one. QRT Limited made certain gift to its employees. How much gift it is given, sir? Employer given gift to employee. Okay, if only if it is greater than 50,000, it can be treated as supply as per Schedule 1 proviso. From there, here if you see only to Z, the amount given is 57,000, which is more than 50,000. So only C will be taken as supply. Next, the person was operating under normal scheme, but now he wants to convert into composition scheme. If a person who is registered under regular scheme wants to convert into composition scheme, he should file CMP 01. Next, Mr. Kapil, director of TRT Limited, registered in Chennai, went for 2 days official seminar in Delhi. Okay, and he booked a hotel there and he stayed in that hotel. What is the place of supply? Sir, this is from 12 subsection 3 clause B, place of supply, direct question only, not much there. Okay, 12. Why 12? Because supplier and recipient are both of them are in India. So, what is the place of supply? Where the immobile property is located. Where the immobile property is located. So, which is nothing but Delhi. Next, under GST law, what is the due date for issue of TDS certificate, sir? The TDS certificate has to be issued within 5 days from payment of TDS. Straight question, sir. 2 marks. Next, the due date of filing of GSTR 6. GSTR 6 has to be filed by input service distributor. He has to file by 13th of next month, sir. This first point, this point, this point, these are covered from my MCQs only. Sorry, my marathon only. Okay, out of the questions we discussed, the first one is covered under my marathon. Second one, it's covered but little tricky. Third one, it's covered. Fourth one, covered in marathon. Fifth one, I didn't specifically refer CMP01, so I'll not count it. Sixth one, covered in marathon. Seventh one, covered in marathon. Eighth one, covered in marathon. Ninth one, sir. So, ninth one is from registration chapter, sir. This is something institute will always surprise us by asking from registration chapter, because in new study material there is no registration chapter actually given, but they are asking questions from it. So, if a person is liable to be registered, what will be the effective date? Sir, here he applied within 30 days from date of liability only. So, what will be the effective date, sir? Date of liability itself is the date of registration. Next, 10th one. Again, this is covered in marathon, 10th MCQ. So, what is the point here, sir? From assessment chapter, sir, this is. Provisionally assessment is carried out and then final assessment is also made. Now, for how many days interest has to be calculated? So, if you see, the due date of payment of tax is 20th September. Whereas date of payment is 20th December. So, for how many days interest has to be calculated? From 21st September till 20th December, which is 91 days. Okay. Next, under Customs Act, which is not mandatory documents required for import of goods from India. Sir, here many students consider it as import, but I thought it as like subject to correction, sir. This MCQ also. Under Customs Act, which of it is not mandatory documents required for import of goods from India? Import of goods into India means then it is import. Import of goods from India means we can even call it as export. So that's why if it is read as export, then bill of entry is the document which is not required. We should file bill of lading, commercial invoice and bill of export. But I don't think it could be read as like import only, because in MCQs they'll give little tricky means. That's why bill of entry is the document which is not required. But I know majority 90% of the students might have selected the option as C. Okay, even in some other analysis videos also I have seen, because I have also 2-3 MCQs. What should be the right answer? Even I thought of taking a second opinion, so I checked. They said like C will be the right answer, but I still think D might be the right answer. Let us wait for the institute answer as well. Next, the following condition is not a precedent for getting duty drawback. Most expected question only, sir. This is for getting duty drawback. What is not the condition to be satisfied? Goods must be identifiable. Yes. The goods have been actually imported. Yes. They should be actually re-exported. The first three are the preconditions for getting duty drawback. Only the fourth one. So what the fourth one says, like entire lot has to be re-exported. No, it's not required. A portion can also be remained. Only a portion can also be exported, so we can get duty drawback. So D is the right answer. Next, under customs law, value of goods to be exported as bona fide gift cannot exceed 5 lakhs in a licensing year. This is from FTP, sir. This is from FTP, sir. Next, anti-dumping duty. Again, sir, types of duty is not there actually in the new study material, but still again they asked a question from it. But it is easy if you go on, if you are at least one time reading, or even if you remember some intro knowledge as well. lower of margin of dumping or injury margin. Next, which of the following statements are correct? Again, sir, this is the last one. This is also a tricky one. Okay, generally, I mean, based on some guess situations, you might have answered this one, but generally it requires a lot of interpretation, sir. Which of the following statements are correct? Sir, while doing this kind of MCQs, generally we'll go for some elimination kind of approach. Even with that also, this MCQ looks tricky. Okay, what the point is, so special exemption is not required to be published in official gazette, whereas publication is required to be in official gazette. So these 2 points given alternatively, sir. I mean, special exemption is not required to be presented in gazette, whereas general exemption is required to be published in gazette. That means 3 and 4 both are wrong. So if you could see where 3 and 4 are both are there, 3 and 4 both are there in B option. Now you can see even the special exemption is granted by notification, special exemption is granted by way of order, whereas general exemption is given by way of notification. Okay, here also this is given as this, where the just jumbled it, sir. It's a simple one line point only in material. Okay, so from marathon, sir, around 12 MCQs covered, but 2 MCQs are tricky, sir. I am adding this third one also because it's not tricky. Maybe I made it as tricky, I don't know. I have seen in some comments also, because students who took approaches what I said also. Let us see how the institute is going to give the answer. So coming to the questions part, sir. Sir, this paper is going to be little tough for the student who didn't study FTP. I can say that if you studied FTP, this paper you can write clearly, you can get 60 marks. And if you are, I have seen students as well who could say, who think like inter syllabus alone is fine. With inter syllabus you can manage. This is one paper which is not actually on inter syllabus. Even from the supply chapter also, even though supply chapter is in inter syllabus, generally we could write an answer with inter syllabus knowledge also from supply chapter. But this time they asked advanced areas, which you generally will not cover from the inter areas. So it's important for us to have a proper coaching which is required for final level. That's the problem. If at all you cannot write the exam well, means then there is a problem with your preparation strategy. You are preparing, you are relying only on the inter level. That's why you're feeling tough. Okay. So coming to the second 2A question, sir. E-way generation facility to be blocked in respect of outward as well as inward movement of goods for defaulting registered person. Okay. So this straight question only, which will be there in material as well. When e-way generation facility will be blocked. Okay, straight question only. I'm not explaining, sir. You can just go and refer it to the e-way bill chapter. You could find it. And even in ABC analysis category also, I will categorize the e-way bill chapter as A, because every time they're asking a question. Okay, so this is one thing which is predicted. Next, QRMP. Yes, QRMP is also predicted question, sir. Why? In returns chapter, I have seen the past MTPUs and MCQs. Even if you see my workbook as well, there are 3 to 4 questions from returns chapter. Out of them, 2 questions will be from QRMP only. So prediction went correct only with respect to QRMP scheme. Straight question only. You should write the features of QRMP. Next, third one, exemptions. Easy question only, sir. Maybe I can think the last point, maybe some students can go wrong. Otherwise, this is also covered from our materials only. Like not as a single question, but these exemptions you know from one question, from another question. So they'll be picking points, but every point is known to us. This is from exemptions. Okay, no tricky thing is involved here, except the students may get confused with respect to this, whether it is FCM or RCM. This is FCM only. This is nowhere covered under RCM. Taxable, and it is covered under FCM. All the others you can answer simply. Next, coming to the B question, sir. This is from ITC and payment of taxes. This is one question, sir. Like ITC generally will discuss advanced topics and all, no? But they asked a plain simple question, sir. I could say like 50% of this, 60% of this question is from inter level only. They given us outward tax payable. They given us tax payable under reverse charge. They given us ITC. What we should do, we should find out the tax payable in cash. How we'll solve these questions are there are three steps: step 1, step 2, step 3. Out of this, if you see, step 1 generally will be doing outward tax, I mean our ITC available, that we need not to do because they given straight away. Step 2, we should calculate the tax liability separately for FCM and separately for RCM. FCM will take it as A and RCM will take it as B. That also we need not do, it also given straightly. So the step 3 alone we should do. That means you should take the FCM liability and adjust the input tax rate available with you. Okay, with the amount balance tax payable, add the RCM amount also, you will be getting the tax payable. Okay, then they are saying you, sir, this point as well. Assuming that the concern has an ITC balance of 2,50,000 each under CGST and SGST for the said month, compute the interest payable. So compute the interest payable. If they ask that point, means then there is no interest at all, because while this is from the second point is there, this is from payment of taxes interest calculation, sir. What does it says means only the liability which has to be discharged through cash ledger, only on that part interest has to be calculated. Cash ledger, the amount which has to be paid through cash ledger, only on that liability only interest has to be calculated. So not on the total liability. That is one point. Maybe even though if you go wrong with this last point, that is also easy one, sir. You could answer the first point, you can easily secure 5 marks from this question. Okay, I can say like 2A and 2B. You could rate moderately, because theory questions means our students generally feel, I mean, all the points you cannot recall. QRMP you can write, sir, the whole concept you can write. Salient futures means QRMP. I think you can get some 5 to 6 marks comfortably. Even on the first question also you can some 5 to 6 marks comfortably. So second question 10 to 12 marks is an average answer. And 3A, okay, most of the people would have attempted. Maybe this one point might have gone wrong. Still stepwise markings are there now, so you can get 5 marks. Next 2B, easy question only, sir. Again, sorry, 3B, easy question only. Again here also you can get 5 to 6 marks. Now coming to fourth one, sir. Fourth question, sir. Discuss in brief consequences of not complying with TCS. So this question, TCS and TDS, we are generally expecting a question. If you see the institute pattern, they're asking a question from TDS and TCS. But the point is, it's not about TDS and TCS calculation. Previously, they used to ask about them. But now, the consequences of not complying with the provisions of TCS. What are the consequences? There will be interest, there will be penalty, there will be late fee. So that's a straight question only. You can write it. Next, this B question, sir. If you didn't read the question, or if you didn't read this concept, then obviously in exam hall, we cannot think of it. It may go in both ways, whether it is mixed supply or composite supply. It may go in both the ways. But this one is there in institute study material. In case studies, this question is given. Okay, clearly some small para will be there, sir, in case studies. This is the one simplified case law which is given in institute book. Okay, if you didn't cover institute book means, then you cannot write, or you may write it as composite supply, because along with UPS, if battery is supplied, okay, those two are supplied together now. But in advanced drilling, the point which they said is like battery is available separately. It's a part which can be separated from the UPS. It's not attached to it. They can be provided separately. So we cannot call them as integral. So it is mixed supply only. It's the decision of advanced drilling. Okay. So that's the point here, guys. But anyhow, I think many students might have taken this question also as choice. If at all, fourth question, if you wrote written means, then you might have taken seventh question as choice, I think. Next, coming to the fifth question. Sir. Fifth question, sir. The first one is time of supply, sir. Very simple question, sir. This is one of the simplest question from the paper here. Time of supply. No complications. Nothing is there. Simply they given the time of supply question, sir. Plain question. You can answer it easily. Next, 5B question, sir. This is from value of supply. Marathon, sir. Again, if you covered marathon means, this question you might have answered easily. Okay, the only point, if you cannot answer this question means you didn't listen to my marathon, I think. Because option 2, I explained it clearly as well. Very simple one, sir. There will be slab rate kind of slab exchange rate conversions. In that way, you should calculate this sum. Okay. Sir, I'll come up with a detailed video once again, sir. I just want to give a review here. That's why I'm coming here. Okay, with the answers, the detailed video, I'll come up with once again, because that would be helpful for you in the upcoming attempts for first attempt students who are yet to write in December attempt. For them, if you want analysis and all means, I'll do a separate video. Now I'm giving only the feedback or what is the right question and all. This rule 32b, sir, in value of supply with respect to currency, exchange currency valuation, there will be option 2, the slab rates kind of thing. That is the right option to be taken, sir. Next, FTP. I said number of times. FTP you cannot ignore. FTP you cannot ignore. FTP you cannot ignore. FTP if you ignored means this attempt terms to be, this paper will become costly for you, because FTP could see, sir, 18 marks asked, sir, 18 marks, and no, and FTP they are straight questions which we can predict. They didn't went to the corners and asked. They asked straight questions, sir, which we could know. EPCG scheme, sir, which is okay. How many times it have been asked in previous questions, you know? Just to open a scanner or any book, or even in my past marathons also, if you see, that many times EPCG has been asked, and again asked. And advance authorization, the first parts are FTP. If you start with the schemes, the first one is advance authorization. Both are straight questions. You could easily get 6 marks from each question, sir. But okay, if you studied FTP. Next, coming to the 7A, sir. 7A is about customs valuation. Customs valuations are here also. Looking at the question, you may think like it is little tricky, but there is no tricky involved here. You should take the FOB value which is given by the customs officer here, 18,500. For that, you need to add air freight. Air freight means you should check na 20% of the FOB customs or actual air freight, whichever is the lower you should add. And insurance cost also given, that should be added. Commission paid should be added. Okay, then what rate you should take, what exchange rate you should take, that has to be decided. And again, simple calculations, sir. This question 7A is easy only. Okay, even my past, still many students are watching my customs marathon which was recorded 1.5 year back. Even with this marathon also, with that customs marathon also, you can write 7th A question. 7B, sir, I could say it is little tricky, sir. Here the provisional assessment has been given, which is not like with GST knowledge we cannot calculate here, sir, because in customs the interest rate is 15%, sir. Okay, the provisionally assessed amount is 3,40,000, whereas final duty is 4,80,000. That means there is a difference of 1,40,000. On this 15% interest has to be calculated, and the number of days should be, sir, in GST will take from the date of actual payment, but in customs it's not from date of actual payment, it is from the date of provisional assessment. When the provisional assessment is carried out from 15th December 2022 to 31st January 2023. You should calculate the number of days. How many, sir? Here 31, here some 16. What is the, okay, 15th December you should ignore, sir. 16, 17, 18, 19, 20 and 11. Here in December there are some 16 days and here there are some 31 days. So 47 days divided by 365. For them you should calculate the interest here. Question number 7B. 8th question, sir. 8th questions are generally, looking at the question itself, many students cannot understand it first. Okay, here K Hotels Limited, sir, it's supplying, sir, it's simple question only. In a hotel, accommodation will be provided, na? They're selling cigarettes as well. So now selling cigarettes, food, okay, and hotel accommodation. So they are not selling everything as a package. Okay, I'm staying in a hotel, I want food, so I call them and they provide me food. Or if some other guy is there, he calls and asks for tobacco or cigarettes. Now the point is whether it has to be treated as composite supply. No, they are not integral parts. Now they are available separately. So it's a mixed supply only. So mixed supply means what it has to be done. Not even mixed supply, sir. They are not has to be treated as composite as well. They have to be treated as like every supply as independent. Okay, sorry, it's not mixed as well. It has to be treated as like everything as an independently. So on tobacco, apply the rate applicable on tobacco. On food, apply the rate applicable on food. So like that it has to be done, sir. Next, B, sir. This question, sir, the point here is Surecraft purchased some goods from JK. What JK did? JK didn't pay the taxes and all. So SCPL, this Surecraft Energy Private Limited, cannot get, it availed ITC, but the department said that since there is no tax invoice, the department reversed the ITC in the tune that 6.4 lakhs on the ground that JK had not paid the taxes to the government. So there is the rule 37 sir, recently introduced. When you clearly follow the amendments, at least this part you can understand here. Okay, what rule 37 says means when the supplier didn't pay the taxes, then recipient has to reverse the ITC, but it need not to be reversed immediately, sir. They given a time where the supplier didn't pay the taxes by 30th September of succeeding financial year, then recipient has to reverse the ITC by the 30th November of succeeding financial year. Okay, so that is the answer for this particular question, sir. Okay, so hope I think you have answered it well. Once again, I am saying, sir, this paper will be tough only to the students who have left FTP and who have prepared only focusing on inter-level syllabus. Then this paper would be tough. Otherwise, this paper would be moderate. This is a moderate paper. You can easily get 60 from this paper. Okay. Thank you all. I'll come up with a detailed video once again.